The biggest issue here is that this inquiry goes back to 2017. About 6 months after the inquiry started, we had a CFO change. 3 months ago on LinkedIn, there was an accounting officer job listing. And of course, 2 weeks ago, Kevin Plank stepped aside and became brand executive chairman and brand officer. So you roll this all together and say, why didn't the company disclose this and bring it up before?
So if that is the case, then, I mean, we're showing stock charts right now, Stacey, because the Under Armour voting class stock, the ticker UAA, is currently down by about 16%. Very thin volume, albeit, I will say this, only about 14,000 shares have traded so far. This is something that investors had responded to in a very negative way because Under Armour had seemingly turned things around for the stock, at least in the kind of near to medium term. Does the specter of this kind of derail the entire thesis for what Under Armour's momentum was all about in the course of the past 6, 9, 12 months?
I don't know that it derails the entire thesis, but it certainly raises questions on the management team and disclosures and why wasn't this kind of put out there considering, this has been going on quite some time. And also, certainly 2 weeks ago when Kevin Plank became executive chairman, everybody was wondering, okay, this turnaround is in process, so why would he step aside now? So there was some questions and conspiracy theories then. So this certainly doesn't help the situation. So clearly, earnings will come out today. Again, I think Under Armour has been quite promotional, more promotional than they expected, which suggests that North America is still very negative. You compare that to Nike, which North America is up mid-single digits, and you put all the pieces together and say this is difficult to invest and believe in a turnaround story with all of these questions circling around. So we'll see how the investigation pans out and what the explanation is today.
All right. So Stacey, you mentioned all of those things as an investor, as an analyst, you'll be looking for those. Without kind of taking a look at the Under Armour picture specifically, tell us about how it fares given the competitive landscape. We've got Nike, we've got Adidas, we've got Puma over at Kering kind of making some ground here. So let's talk about whether or not Under Armour can sustain this momentum, even fundamentally, without the accounting issues playing into the discussion here.
Sure. And again, so all those accounting issues aside, let's just look at the fundamentals of the business here. Again, North America is probably going to be down 5% when they report today. So that's a big delta between what Nike's doing. Certainly, Under Armour's been doing well in China. They were up about 20%. Europe was up mid-single digits. So that's great. And certainly, they have done a great job of cleaning up the channel. And that's fantastic. But the question is, what happens next? Once you clean up the channel and let you have less promotions and you get those margins up, then you have to start moving the units. And the question here is, again, with the direct channel so focused on the outlet business in North America and a significant wholesale business which continues to be incredibly promotional out there, specifically for Under Armour, not for Nike and the others. The question is, what next? How do we segment the product here for success in the long term? And that's still a big question mark.